NYSE was on has hit their monthly redemption limit in January. And I mean, that's a continuing story there of housing upset.
Well, and what has been priced in versus not, given that it's not a very liquid market.
For Global Wall Street, please stay tuned. Professor Abby Joseph Cohen of Columbia Business School. Good morning. This is Bloomberg Surveillance this morning and this afternoon.
Wants Congress to open up mobile app stores to greater competition. Thieves stole a record $3.8 billion worth of cryptocurrency in 2022. That's according to blockchain research firm Chain Analysis. Its report says that hackers linked to North Korea stole an estimated $1.7 billion last year, more than 4 times as much in 2021. And as you've heard here on Surveillance, pro football quarterback Tom Brady says he's retiring from the NFL, this time for good. In 21 seasons in the league, Brady won 7 Super Bowl championships, 6 for New England and 1 for Tampa Bay. Brady announced his retirement last year too, but a few weeks later, he returned. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
fascinating here is what Powell reads off script. There's so many sensitivities. Does literally every question, does he look down and read that silly scripting, pretending he's not reading it? I mean, that's on radio, for those of you on radio,
so true.
it's hilarious when, and Lagarde does the same thing. I mean, I'm not picking on anybody here, but, the question, let me answer that as best I can, and then they read off the script.
We have decided collectively as a group. No, but I really do want to hear what he has to say about financial conditions, how much he pushes back, and whether it does bother them or whether they're okay with it because the economic data is softening enough to give them comfort.
One of the great fears of academics on the island of Manhattan this year has been to audit Professor Cohen at Columbia Business School. Joining us now as she rockets out of a term into tests and grading, Abby Joseph Cohen, of course, a nodding acquaintance with Goldman Sachs and professor Columbia Business School. Are you enjoying it, Abby? I mean, is this like a whole new life for you where you're gonna be there till you're emeritus? I mean, is that where we're heading?
Good morning, Tom, and good morning, Lisa. I'm having a great time at Columbia. The students are absolutely wonderful. About half of them are from outside the United States, and they're all extraordinarily well prepared. Most of them have worked before they've come to business school, and so these are people who are really committed and focused on what they're doing.
Let us talk about a paper you did. I don't know if you dragged it out for your students and punished them, CFA Institute, where you brought some Greek philosophy to Columbia Business School. And what Aristotle suggested in your iconic paper is get off the wagon of believing every data point. Tell us what's suspect right now. What's the humility we and the chairman have to bring to scanning every tea leaf?
Fabulous question and a very timely one, Tom. Right now, I think there's so much focus on U.S. data among U.S. investors. We have to recognize that the Fed is also looking internationally, and they're looking at the trends there, both with regard to economic growth and inflation. And then, of course, there are the concerns about what happens to the data in China. People don't quite trust those data. And so when we turn our attention back to the U.S., it's our employment data. But today alone, we're going to be getting the JOLTS data, which will be a very important element of what we look at. And of course, the employment cost index information, which is critical. When I think about what I worry about most right now in terms of too much instant analysis, it would be the company reports. We're in the middle of earnings reporting season. And what we know from history is that in periods when the market has been down, companies will take a look at those fourth quarter results and say, you know what, let's take some reserves, let's throw in the kitchen sink. It clears the slate and gives them a lower base from which to work for the subsequent year. So I wouldn't read too much into the fourth quarter results, particularly when they seem to be throwing in all kinds of disappointments that they knew about for a long time. And I'm much more focused on economic activity going forward.
Have we priced out free money from equity valuations, Abby?
To a very large extent. We saw that happening during the course of 2022, Lisa, when we saw PEs in general going down, but the segments of the market, not just in the United States, but outside as well, were basically the high beta, fast growing areas that really depended on low interest rates. For the low discount rate, it gave the valuation. So, we saw it here in technology stocks, other growth areas, but we also saw it in emerging markets, particularly in the first half of last year. And by the time we got to the third quarter, I think that investors were looking at this revaluation.
Hey everybody, welcome to Trading Capital's live stream of the Market Open. Today is currently a new month kicking off February 1st. And it's going to be an action-packed February 1st. Basically, we have a whole host of economic data. Currently, we have the ECB speaking, Christine Lagarde. We just received some initial ADP non-farm payrolls, which came in better than expected. So really emphasizing the strength in the labor market, which ultimately that's not what Powell wants to see. Obviously, we have manufacturing PMI, ISM, JOLTS, and oil inventories, and then obviously the long-awaited FOMC interest rate hike. Will we get 0.5 or 0.25? Markets are pricing in 0.25 with a 99% chance. of getting a 0.25 and a 1% chance of getting a 0.5% hike. So obviously that's later in the afternoon. I'm expecting that there's probably going to be not too much volume initially. Most of the volume will probably pick up around the 2 o'clock time frame when we get that rate hike and when we also get that decision from Powell. So a few things that we're watching on the radar today, I've already put in the chat. We're looking at an AI short. So let me just pull up AI here. So you can see we played this one yesterday. Let me just erase all of this mumbo jumbo. But the levels, there's a couple levels, 2170 and 2240 on AI. 2170 and 2240, we're looking to short AI. So basically the first level would be around here, 2170. We're currently trading at 2057. We're also looking at Baidu. Baidu's up huge. It's gapped up today, basically trading currently at 145.10. So believe it or not, this is actually a short level on Baidu. Let me just make sure I'm on the right one here. Yep, this is actually a short level. Now I'm going to wait just to see if we get some extra volume in. But you can see that we're into some good resistance. And basically, in terms of the Baidu, right now it's trading at 145.10. I would love to see it come up to this wick high here around 145.67. And then obviously if you continue to push through there on good momentum, you have these wick highs up here, which will act as extra resistance at 155. But China is very strong. Typically you do see a surge in the China stocks early in the morning, and then they do like to fade into the afternoon session. Obviously with the back of the FOMC, we could see a market fade in the afternoon just based off of fear. Right now we are seeing electronic arts down substantially, EA. So I haven't isolated a level on EA yet, but basically you can see EA has dropped substantially. Let's see what EA is down. It was close to 10% yesterday, but today it's down roughly 8.8%. So it's a big drop on EA. In terms of a level that I'll feel comfortable trading EA, basically this first double zone over here at 114.40, and then ultimately this gap fill and double bottom. Okay. So the first level we'll look is for a 1-6 position on EA if it came into that level. Just for a quick day trade bounce. This is not a swing trade, it's just a day trade. So let me just write this down, EA. I'll put EA in the ticker or in the chat as well. EA. So EA long. And then we obviously also have Snap down substantially, but it has had a bounce. There is a couple levels on Snap that I'm watching. Let me just pull it up here. In terms of, I can get rid of that because Snap's dropping. In terms of a level that I like on Snap, let me just look on my other chart here. So Snap's had a pretty decent bounce off the lows. It's already caught a bounce of roughly just over 4%. 944 is the first level I like on Snap, 944. So basically, or a pierce of that level. So 944 on Snap. And then we'll have additional support around the $9 level. And you can see Snap also has this upsloping trend line here. But we'll just have to wait on Snap. Let me just see if there's anything else. You also have Peloton gapping up a little bit in the pre-market here. Peloton's trading at 13.53, so it's up about 5% on the session. Basically, the only short level I'd feel comfortable on Peloton, since it's so beaten down, is if it came right into this 14.74, this wick high. I would skip this pivot because you really came up very close here. Although you are filling a key technical gap today over here, which we can actually put that in. You are finally filling that key technical gap on the last earnings report. So it's really interesting to see Peloton still basically gapping up, even though it's had a huge miss on earnings, but a surprise on the revenue side. But 1474 on Peloton. You're also seeing many of the gambling stocks going ballistic. If I simply pull up some of the gambling stocks, or sports betting, sorry, you're seeing MGAM. Look at this move. I mean, these stocks have been beaten down, but it just shows you, I mean, go from 248 to 4 something. That's an astonishing move. Now, we may have a short level on this. These are super high risk, but I mean, this stock is up in the pre-market. We're talking about a 57% move. Basically, in the last 2 days, you're up 326%. So we can keep MGAM on the radar. Let me just do a volume check. Yeah, it had massive volume yesterday. So EA long, MGAM. And then you have many sympathy plays such as Phase, GMBL, AGAE, SBET. SBET's another one that's just flying, soaring. All of these stocks are soaring in sympathy. I mean, again, you're talking about, this might be the 100% move here on SBET. Oh, it's up about 40, but massive rally yesterday. On SBET, the only level I would feel comfortable shorting is if we got a huge pop. You can see we're coming up to the daily 200, so that is decent resistance in the near term. But again, these stocks have had such powerful rallies that you likely want to be a little more conservative. I would let it pierce the 200. Potentially you can accumulate a short at this 90-cent level, 89 cents, this major pivot. But I would let it pierce the 200 just with the momentum that we're seeing. Now we are seeing a little bit of a sell-off in the S&P as we speak. But if we take a look at some of these other gambling stocks, eBet is another one. You know, massive moves. This is probably ahead of the Super Bowl. So people are piling in. But again, if you look at the last few sessions, basically in a couple weeks, you're already up 255%. So they can obviously go higher. All stocks can obviously go higher. 216 would be the level on that stock, 216. There's going to be massive volume surges. Just trying to see if there's anything else here. Let me just pull up these stocks on my other screen, so we can see. And we have roughly still half an hour to the open. Right now you're seeing the dollar trying to put a little bit of bounce. At 9:45 we have manufacturing, and 10 o'clock we have ISM. Let me just keep looking at these. So SLGG is another one that's beaten down. Super League Gaming. Phase is up substantially. AGAE. I do like the AJAE stock for a short. It hit the 200 yesterday, so you likely want to see it pierce. Let me just put some resistance. eBet, RSI. So we'll keep an eye on a few of those stocks. I'm just going to keep scanning through to see if I see anything else. You also have AMD up, Foot Locker's up 3%, Match Group, the online dating slid 8.3, Western Digital dropped nearly 3%. So that's the snap chart. Let's just look at the SPY here. Let's look at AMD. In terms of an AMD short level, AMD is up to about 77.90. You can see the 200 daily moving average is approaching. Last time we saw it approach this area, you had these massive sell-offs over here at this double top. Let it pierce that level. If AMD can actually come up and pierce the 200 daily moving average and hit this yellow trend line, that's a decent short opportunity around the 81 or just about $82, or a pierce of 82 if it can get up there. And then you have double resistance at these two trend lines, which could be your fail-safe resistance level. So that's the short level on AMD. So we'll continue to keep that on the radar. Futures. And right now you are seeing yields down, the dollar down, markets down, oil up, natural gas down. Natural gas might be another play. We played it yesterday via the Boyle ETF. Boyle's times 2. But natural gas just can't seem to get out of its own way. You know, it's ever so weak. I mean, look at this rally. And now you've done a complete round trip again. And this is actually a great level on Boyle again. If you pick it up right at these levels, 699. I'm going to grab a little bit of Boyle here at 699. Long Boyle at 699. So imagine that. We picked it up yesterday at 702 in the pre-market. Now we're actually picking it up 3 cents cheaper and just accumulating a 1/6 position. Long Boyle. I'll put it in the chat for everyone. Long Boyle at 6.99. 1/6. The next ad level on Boyle would be, oh, we're getting a nice little drop. $6.83. So 684, you can see it almost just pierced that level. 684 will be the next ad level. 665. Let's just map out these levels. 645. $6.30. $6.15. So those are the ad levels on Boyle. So we're long natural gas via the Boyle. The Boyle is an ultra ETF, so just keep that in mind with your position sizing. If we actually take a look at the natural gas chart, let me just pull it up. We are greatly oversold, tagging the low end of this parallel channel in a potential falling wedge pattern. And then you look at what type of support we're coming into, these pivots down here. So there's massive, massive support in and around these areas for nat gas. You know, even what you're tagging right now. And I mean, just look at this sell-off. This is kind of puts into perspective. Most people were saying natural gas was going up to about 50, you know, or at 25. Now, I didn't expect natural gas to fall this fast, but this is what happens. And you're almost coming into a measured move here. I haven't done the calculation, but it looks very, very almost identical. This high to this low